This simple indicator was developed by Odir Aguiar, a technical analyst and Millionaire trader. The indicator is based on technical analysis and helps us find the strength of a trend, potential entry points, potential exit points, and the overall direction of the market. It's extremely powerful, however, many people don't know that it exists or don't use it correctly. The indicator we are talking about is the DiDi index, also known as the Brazilian MACD. Make sure to watch the full video because we will be showing you exactly how the indicator can be used along with a profitable strategy to use the indicator with. Let's first add the indicator to the chart. To do this, head over to TradingView and click on the Indicator Search tab. After that, search for the DiDi index indicator. Select the indicator made by Aguiar and add it to the chart. To be able to make profit by using the indicator, it is crucial to understand how it works. The indicator consists of two lines. The green line is the fast-moving average and the red line is the slow-moving average. There are a few ways that we can use the indicator. Let's quickly go over two methods. The first method is by removing the green fast-moving average line. We will then be using the red line crossing below or above the zero line as the entry signal. Whenever the red line crosses below the zero line, we will enter into a long position. This occurred here, so let's enter into a long position. As you can see, the trade would have been very profitable. For a sell position, the opposite will be true. We will enter into a sell position when the red line crosses above the zero line. This occurred here, so let's enter into the sell position. Even though this strategy works well, we will be using a different method to read the DiDi index. For the method that we will be using, both lines will need to be enabled. We will enter into a buy position whenever the green line crosses above the red line. As you can see, this causes for a green dot to be printed. This means that we can enter into a buy position. For a sell position to be valid, we will need for the green line to cross below the red line. This will cause for a red dot to be printed, meaning that we can enter into a sell position. Despite this being a good way of using the indicator, many false and losing signals are provided. Along with this, we also see that many good trades are missed out on due to late signals. To avoid missing good trades or entering into losing positions, let's add other indicators to the chart. Head over to the Indicator Search tab and search for the Kijunsen indicator. Select the indicator made by Erwin Backers and add it to the chart. The third indicator that we will be adding to the chart is the Relative Volatility indicator. Search for the Relative Volatility indicator and select the indicator made by Verifid. Now let's change the indicator settings to optimize them for the strategy. Let's first change the Kijunsen settings. Head over to the Kijunsen settings and click on the Inputs tab. We'll be changing the period from 26 to 30. After that, navigate to the Style tab. We will be changing the color of the Kijunsen line to yellow to make it more visible. The second indicator we will be changing the settings for is the DiDi index indicator. Head over to the DiDi indicator settings tab and click on the Inputs tab. We will be changing the short length to 7. After that, we will change the medium length to 15. Next, we will be changing the long length to 30. We will be keeping the style settings the same, so we can now close the DiDi index settings. The last indicator we will be changing the settings for is the volatility indicator. Click on the Indicator Settings tab and navigate to the Style tab. We'll be unchecking the first 3 filter checkboxes. That was all that we needed to do. Now that the indicators have been optimized for the strategy, let's take a look at how we will be combining the indicators to enter into a position. We will be using the DiDi index indicator as the signal indicator. This means that the DiDi index will provide the signal that will tell us to buy or sell. After this signal has been provided, we will use the Kijunsen indicator as the trend confirmation indicator. Finally, we will use the volatility indicator to make sure that there is enough volume in the market to enter into the position. This is how we will combine the indicators to create a profitable strategy. Now let's take a look at when to enter into a buy position. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade. The best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of HenkoTrade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with HenkoTrade. Sign up via the link in the description to register with HenkoTrade and get access to all of these perks. To enter into a long position, we will be looking for specific conditions to be met. Firstly, we will be using the DiDi index indicator to identify a bullish crossover. This is when the green line crosses above the red line, causing for a green dot to be printed. This signals a shift in the market towards a bullish trend. We will be waiting for this crossover to occur before considering entering into a long position. To confirm the bullish signal, we will then turn our attention to the Kijun-sen line. The Kijun-sen line is a critical indicator of the longer-term trend in the market. We will need to see that the price is trading above the Kijun-sen line to confirm that the longer-term market trend is also bullish. Finally, we will use the volatility indicator to confirm that there is enough volume in the market to enter into the long position. We will need to see the bar on the volatility indicator cross above the moving average and filter lines. We will also need to see that the bar is green to confirm that the volume is bullish. This will provide us with further confirmation that we can enter into the long position. Once all of the conditions have been met, we will enter into the long position. We will place our stop loss at the recent swing low, which is the lowest point the price has reached before it started to move higher. For the take profit, we will be targeting a 1.5 times risk to reward ratio. This means that our potential profit will be 1.5 times greater than our potential loss. Now let's see how the trade plays out. Here we see that the DiDi index lines cross to the upside, indicating that the trend has switched to a bullish trend. We also see that the price is trading above the Kijun-sen line, showing us that the longer-term trend is also bullish. However, we will not enter into the position. This is because the volatility indicator is showing us that there is not enough volume in the market. This can cause for the price to never hit our take profit target and instead switch to a downtrend. But let's see what would happen if we do enter into the trade. As you can see, the price ended up barely moving for a while and eventually reversed back into a downtrend. To enter into a sell position, the following conditions will need to be met. Firstly, the DiDi index indicator will need to make a bearish crossover. This means that the green line will need to cross below the red line, causing for a red dot to be printed. This shows us that the market has switched to a bearish trend. To confirm this signal, we will first look at the Kijun-sen line. We will need for the price to be trading below the Kijun-sen line, showing us that the longer-term trend of the market is also bearish. Finally, to make sure that there is enough volume in the market to enter into the sell position, we will take a look at the volatility indicator. We will need for the bar on the volatility indicator to cross above the moving average and filter lines. To make sure that the volume is bearish, we will also need to see that the bar is red. Once this condition has been met, we will enter into the position. We will be placing the stop loss at the recent swing high. For the take profit, we will target a 1.5 times risk to reward ratio. Now let's see how the trade plays out. I hope you enjoyed the video and could understand how powerful such a simple indicator can be. Please leave a like and subscribe to the channel if you did.